Students, now let us talk about some of the external metrics that are used by different organizations to measure the external performance that is actually not being measured inside the organization, but from the outside world. The first one would be the customer service. Customer service is a broader metrics. There are so many measurement tools of customer service. And customer service essentially has three dimensions. So any measurement or metrics of a customer service should include these three important dimensions. That is quality, time, and cost. These three dimensions essentially affect the customer service. Quality may be measured or expressed in several ways depending upon the type of industry. Quality, remember that it's a broader term for any industry and it varies from the type of industry. Then we have the service reliability. Service reliability is mostly related to distribution and transportation. Most transportation companies use this metric to measure their customer service performance. Yes, the customer service level or customer service metrics is actually a very broad term. So service reliability will become a part of it. It is measured by the number of shipments that are delivered to the customer within certain time units of the promised delivery time. What is service reliability? It actually tells about the consistency of that distribution or transportation company. That how consistently you are providing the shipments to the customer. That is, your shipment would be in time or on time, and on time actually depends upon the definition of minimum variability being adopted by that organization. For example, for some company, the delivery date plus minus 2 days would be on time. And for some companies, delivery time plus 24 hours or 4 hours might be the target time. That is the minimum variability. So if they achieve it, they have a service reliability and they are achieving customer service or they are achieving higher customer service level. So the definition of reliability actually changes as well from industry to industry. Let us take an example how to measure the service reliability. For example, for an organization, 4 hours plus minus of the promised delivery time is something which is reliable for them. So for them, how would we calculate the service reliability? Service reliability would be calculated as number of shipments within plus minus 4 hours of promised delivery time divided by total number of shipments. So you want your service reliability metric to be higher in number, because in that case, your total shipments within the minimum variability would be higher. For example, for Domino's Pizza, this plus minus is just for 5 minutes. So their delivery time is like 25 minutes plus minus 5. That is the max which they can take. So it varies. Service reliability, definition of service reliability would vary from industry to industry. Then we have customer complaints. Customer complaints may arise from a variety of reasons. Late arrival, late departure, not delivering on time, a lost or damaged shipment, inaccurate order and poor quality parts are some of the common reasons. So if you have damaged shipment, not delivered on time, late departure, late arrival, all of these things account for customer complaints. Most companies aggregate all the complaints. So, customer complaint is actually equal to number of complaints during a period, irrespective of the type of complaint given by the customer. Then we have government perspective. The measure actually used by the state governments may not be the same as those used by the federal government. So county office metrics may differ from city level metrics. So from broader to the narrower term, in terms of like from city to towns or counties, or from the state government to the federal government to the state governments, it might differ. This metric might differ. Government tends to measure industry performance based on the number of new jobs created, revenue from taxes, new infrastructure development, and impact on other industries. This is how the government would actually look at the industry performance. This is the macro perspective of industry performance. So they will be looking at how many jobs have been created. What is the revenue which they have collected from the tax? What is the new infrastructure development? And what is the impact of that infrastructure on different industries? Students, we have seen some of the external metrics. Thank you.